Well, howdy there, folks. Today we got to talk about, am I even bullish on the stock market anymore? Am I bullish about particular stocks? We're going to talk about some individual stocks in this video that I haven't talked about in a while. We're going to talk about the markets in general. We're going to talk about real estate. We're going to talk about a lot in this video. And going into this year, essentially, I kind of started the year off with a bang. In January, I came out with a video. It was called I'm Preparing for Recession. And this was a video that went into depth on why I thought there was a good probability we're going to end up going into recession. Now, since the video came out, I would say there's probably a higher probability of a recession than even when I put out that video now. We're seeing it in company earnings. And the thing I was most worried about going into this year, I remember even talking about this on Millennial Money, is the middle class. And I said, what I want to keep my eye on in 2022 is the middle class, because the middle class is what drives the entire economy. They're what drives pretty much almost every single company's earnings out there. It's the middle class. They drive this whole show at the end of the day. There's a very small amount of rich people in the world, right? There's a very, I don't want to call it a small percentage of folks in poverty, but that's a group, right? But the middle class, this is what drives the entire economy. That's who's buying all those iPhones. That's who's, clicking around on ads on Facebook and Instagram, right? That's who's ordering all the Amazon packages. It's the middle class. They drive this whole show at the end of the day. And so the middle class is being destroyed by inflation. Everybody knows that. Everything's getting so expensive. It's insane. And so obviously I think that puts the odds of recession higher than they've been. Honestly, probably in the past decade plus. Let's just put it that way, right? So the NASDAQ's getting destroyed. We're now in bear market on the NASDAQ. The NASDAQ's having one of the worst months in the history of the NASDAQ. It is very, very, and this is going up totally on the DL, which is, I think, is quite telling. We're in this NASDAQ where literally, if Apple reports some troubling numbers at Microsoft this week, and those stocks fall, and the whole NASDAQ falls a few more percent, this is going to be one of the worst, if not the worst month in the history of the NASDAQ. And I feel like media is not even really picking up on this. And I just find it like shocking, to be quite honest. I'm like, are you guys even like looking at this? Like, you guys realize this is like the worst? This is going to be one of the worst months in the history of the NASDAQ. It's absolutely insane. Unless magically Apple and Microsoft and those companies end up saving the market somehow over the last few trading days, this will be one of the worst months in the history of the NASDAQ. And bear market now, we're in a NASDAQ, bear market in the Russell, and we're on pace for one of the worst months ever. VIX is spiking super high. Okay. So let's start talking about individual stocks here. And let me share if I'm even still bullish on these stocks or not. Well, the first one, let's start off with a bang. Tattooed Chef, TTCF. So this is a stock that's been absolutely obliterated the past 6 months. It's lost half of its value in the past 6 months. Devastating, just devastating fall for Tattooed Chef. And obviously just one of hundreds, if not thousands of stocks in the stock market that's just been absolutely devastated since about November, right? So the stock's down about 50%. As far as the short term on Tattoo Chef, as far as the stock price goes, this is not the sort of stock that the market wants to own right now, pretty clearly. It's a money loser on the bottom line. And I mean, if the stock market doesn't want to hold stocks like PayPal and Netflix and Facebook and stocks like that, I mean, we've even started to lose Google stock recently. I mean, if they don't want to hold those sorts of stocks, like something like a Tattooed Chef, at least in the short term, has no hope. No hope. Now, am I still bullish on Tattooed Chef over the long term? Absolutely. Am I still buying Tattooed Chef shares actively? Yes, absolutely. And everything as far as the long-term story with the chef is intact. But we can't just act like this isn't the sort of market that wants to own these sorts of stocks. Like I said, if the market's going to shoot stocks like PayPal and Facebook and Netflix and those sorts of stocks down 50%, and even Nvidia is starting to fall big and Google's starting to fall big, when those stocks are falling big, I mean, who's there to pick up some Tattooed Chef shares other than maybe me, and folks that are super bulls in the stock for the next 5 years. Outside of us, is a very, very small amount of people that are looking to hold a stock like this right now. And so everything is on pace for the long term for Tattooed Chef, but the short term is what the short term is, essentially. They're doing everything in their power to expand this business. They're doing a great job. They're growing the business. 2022 is going to be an amazing growth year for the company. They come out with new products, getting new SKUs in stores. Everything's great as far as that goes. But the stock price is stock price is not the company here in the short term. Corsair Gaming, CRSR, this is a stock that's been, devastated the past 6 months, down 37%. Corsair Gaming, so short term's obviously really, really bad for them. And they make gaming hardware, streaming hardware, things like that, right? The Short term for Corsair Gaming is devastating. And just another consumer play that's being hit very hard right now that I'm looking at, and I'm like, ugh, this is another reason why I think we're more likely to go into recession. There's just one of many companies that are just reporting disappointing earnings right now. Now, when it comes to CRSR, Corsair Gaming, is the gaming sector going to get a lot bigger over the coming years? Absolutely. Corsair's got a great brand name. Is the streaming hardware going to get a lot bigger over the next decade than it is now? Absolutely. So Corsair Gaming, the long term still intact there. The short term is just a complete disaster. That's just the best way to put it. So, as far as my long term thesis for Corsair, it's still 100% intact, but the short term is what the short term is. The money's just not there right now. It's as simple as that. Like, the money's not there to order those sorts of products right now. But also, I think if anybody wants to call the death of gaming, they're making a huge mistake. Like that's going to continue to grow in the future. It's under a price to sales ratio right now of under 1. Insanely low valuation. But like I said, if the market doesn't want to hold big stocks right now, I mean, Corsair Gaming just has no hope in the short term, right? Honest. This one's fallen 54% in the past 6 months, just been absolutely devastating. I've been just picking up shares left and right, but let's be very clear, every share I've ever bought of Honest, I'm down on, right? When it comes to Honest, this might be my most bullish stock, actually, I possibly hold as far as risk reward over the next, let's call it 5 years. I don't think there's a stock I hold for the next 5 years that I am that sure of that I'm going to make a ton of money and not lose money over the next 5 years. And so I think it's probably even a stronger feeling for me based upon the numbers and projections I run and where I think this company's valuations go. I think it was even stronger than Tattooed Chef, which is kind of telling for me. So yeah, as far as Honest, 100%. I think this one will come around short term as well. Let me be very clear about that. I think this stock's going to show a lot of strength in the back half of the year. Obviously, if the market continues to crash, that's going to make it a tough uphill battle for Honest. But regardless, I'm very confident in the stock in the back half of this year and obviously over the long term. Oatly. So Oatly's a stock I started buying a lot this year and kind of in here right now. Over the past 6 months, the stock's fallen 73%. Oatly, my confidence level for Oatly is incredible. Like, just go to stores and you're going to see their products sell like insane. They have the best products out there in the market when it comes to oat milk. They continue to expand their brand around the globe, China, Europe, US. Like, they literally can't even keep the shelves full because it just sells that insane. So, I mean, easy money long term, but like I said, money loser. No one wants to hold this sort of stock in the short term in this sort of market. This will be eventually a $20, $30 plus stock, but right now no one wants a piece of Oatly. My confidence level is sky high for this company. I'm going to continue to add more and more shares to the stock over the coming, basically for the rest of this year. PayPal. This stock's fallen 65% in the past 6 months. PayPal, obviously one of the most famous companies in the world with PayPal and Venmo. Great cash flow company, great profitable company, P not even that insanely high, great growth company in general, right? Stock's still fallen 65% in the past 6 months. For PayPal, I'm incredibly bullish on this company. Like, for the 100 billion in up market caps, I think it's the best value in the market right now, especially for anybody that wants to hold the stock over the next 5 years. But with that being said, the market just wants no piece of these sorts of stocks right now. And, this is very, very telling. And, the thing with PayPal and some of these stocks is they broke the trend that a lot of people thought. A lot of people thought, well, as long as you hold a profit beast company, a famous company, a worldwide known company, you're going to be safe. And PayPal and some of these other stocks, they broke that trend. Netflix broke that trend. PayPal broke that trend. Facebook broke that trend. Google starting to break that trend. NVIDIA will break that trend. AMD will break that trend. It's already started to break that trend. Adobe, Intuit, those companies will even break that trend. Adobe's already started as well. That one's down, I think, 30% plus in the past 6 months. So, even these great profit beast companies, these cash flow machine companies, even those Wall Street wants no piece of these stocks. But PayPal, I mean, is a great company long term. Facebook, same exact situation. I think it's got one of the best risk rewards of a big market cap stock. It's a P of 13 now. It's laughable. These valuation metrics, how low they've gotten on countless of these stocks. For a company like Facebook with the balance sheet they have, the income statement they have, Facebook, Instagram, WhatsApp, they're going to be the number one player in the metaverse, and it's just. But it doesn't matter right now in the short term. It doesn't matter. Wall Street just doesn't want to hold anything in this market, right? Nothing. It doesn't matter. But this one I'm as confident in for the long term as I've ever been. BYND. So this one's fallen 58%. This is a smaller position for me in terms of Beyond Meat. I would say with this one, I'm the least confident of these bunch of stocks we're talking about here. The problem with Beyond Meat is, I look at Ethan Brown, and he's been a great innovator in the space, right? And built a very famous brand in the plant-based food movement and trying to replace animal products and those sorts of things. And that's great. But the problem is, I think Ethan Brown probably looks at things a little too from a philosophy side sometimes, and maybe gets a little too focused on the long-term mission rather than focused on the business. At the end of the day, you're running a business and you need to operate as a capitalist. And I look at a company like Beyond Meat, I don't think they're innovating fast enough. I've been disappointed in that. And I look at a company that I think they're honestly getting beat by Impossible. I really do. And that hurts me to say that, but I think it's the truth. I think they are getting beat by Impossible right now, and that sucks. And so that's very, very different than like a situation like Oatly. Oatly's not getting beat by anybody. They're winning. Tattoo Chef's not getting beat by anybody. They're winning. They're dominating freezer right now. And they'll dominate anything they compete in. They just are that sort of company, right? They got that sort of competitive fire, and they will outcompete anybody and they'll destroy them. But Beyond Meat, I don't see that from the management team. I don't see that sort of fire from them that they're going to come in a space and you better watch out because they will take you out. Beyond Meat's just not, they're just not that sort of company. And I think they're losing to Impossible. And so that hurts me to say that. So with Beyond Meat, I still like it for the long term, but I got to say, of the stocks I hold, this is probably my most or my second least confident stock I have out there, okay? Now, Avon Brands, the stock's been in a tough place, down 45% in the past 6 months. Avon Brands numbers are incredible. Their last quarter knocked the socks off the market. I mean, is it insane? Like literally insane their last quarter. But with that being said, they could beat all the numbers in the world. It's a super small market cap. Wall Street doesn't invest in stocks that are under $100 million market cap. Retail's gone bye-bye in this market. So the tough thing for Avant right now is they're reporting these insane numbers. No one cares. No one cares. And that's, I would call it annoying. It's the best way I could put it is annoying. Like they blew numbers out of the water. Like I was shocked. As a bull on this stock, I was shocked by their last quarter. But who's there to buy the stock? Like who's even looking at their earnings? Like literally, their earnings came out. They reported these insane growth metrics, way better numbers than even a lot of us bulls were expecting. But who's even looking at that? Wall Street's not looking at this company. It's under $100 million market cap. Retail investors aren't even in the market right now for the most part. And if they are, they're very, very scared. So they're not going to buy a stock like Avant. So that's a tough thing for an Avant. And I'm going to continue to buy shares and increase my ownership position in this company because I love the long-term story at this company and the numbers they're putting up. And they've been executing. If you want to talk about a management team that really has that competitive fire, in my opinion, Norton and that team over there, they really got it like that. And the numbers are proof in the pudding. But who's there to buy the stock? And that's a big question. So that's the problem with a stock like Avant is like, who's there to buy the stock? They're putting up these amazing numbers and just no one even cares right now. So that's a tough thing, but continue to be a bull on that one. I'll continue to increase my ownership position. I probably have, I would say, over 1 million shares of Avon Brands, something like that. Real estate. Am I bullish on real estate or am I a seller? I would say I'm a seller. I'm pretty bearish on real estate starting this summer. I'm even going to likely sell one of my homes. Way too many good deals in the market. I'd rather plug that money in the market, especially if the market continues to downtrend, right? And imagine we go into a bear market on the Dow and the S&P 500 as well. But the way I look at it is, man, I think, I talked about the middle class to start, right? Middle class also drives housing. Interest rates are going insane. They're probably going to continue to go insane throughout this summer. And on top of that, homes are so unaffordable, it's ridiculous. If you look at the affordability metrics, we're off the charts. Like, homes are not affordable. So I think the homes are going to slow in a massive way starting this summer. I'm not ready to predict a crash in the housing market, like where home prices go down 30, 40, 50%. But I think there's going to be a massive slowdown. And I think best case scenario is we have a stagnating housing market for a couple of years. That's best case scenario, in my opinion. I think it's very likely that we could see decreases. And I think new home orders are going to dry up in a massive way starting this summer. You just start running the numbers and it's just not there anymore. With the way mortgage rates have gone up, a lot of the people that already wanted to move have already moved now, that were kind of in that work from home, like, oh, let's buy a new house so I can get an office and things like that. Those folks already made that move. Mortgage rates were at the lowest they've ever been for about 2 years. Those days are long gone now, and it's just getting worse and worse. And I don't think it's a good situation. I think we're going to see a slowing housing market in a massive, massive way starting this summer. And like I said, I wouldn't be surprised if we have a stagnating housing market for at least a few years, if not a downtrending one. And let's just hope it's not an 07 through 2011 type scenario. Let's hope. That's all I'll say about that. Let's hope, because that would be obviously really, really bad, right? This was a very simple comment somebody left, but I love it. I think it is very, very telling, right? This person says, let me explain to everyone what is happening in the economy. This was left on the video I posted last night on the channel. I used to pay $100 to fill up my gas tank a week. I'm assuming they drive a big truck. I am now paying almost $200. That's an extra cost of almost $400 a month. This is just gas. This is not including the rise in groceries, which that's gone insane, utilities, etc. Considering a lot of families either live paycheck to paycheck, truth. That's just truth. Like most families are paycheck to paycheck, or have little disposable income. Families will have to cut costs elsewhere to try and make up for that. I personally have stopped going out for dinner, cut down on beer. That's funny. And you can't cut down on beer, man. Come on. No, and cut down on random shopping and going to stores. Now multiply that by millions of other families. You have yourself a struggling economy. Very simple comment, but it's the truth. I mean, you just run the numbers there, and wages aren't going up nearly fast enough to offset that. And companies are already reporting a lot of struggling numbers. So it's not like companies are all of a sudden banking money left and right. A lot of these companies are missing earnings left and right. And, this is when inflation's just really started to hit the consumer. What happens as it hits more over the next 3 months, 6 months, 9 months? That's a big concern. And so, it's hard to be insanely bullish on the stock market short term. I will say that, because of what is going on out there. And it's hard to be insanely bullish on the economy, because eventually this starts catching up to people. It didn't really at first, but I do worry that, as time ticks on here, it starts catching up with people. And, with how much rents have gone up, how much gas prices have gone up, everything that a person has to buy. Like I said, wages haven't gone up enough. They just haven't, right? Stimulus is long gone. People have blown through that stimulus money. And so you kind of end up in a real pickle here, right? Bitcoin and crypto. I worry a lot about Bitcoin and crypto. I'll be honest. A lot of people are obviously, choose to invest in crypto and Bitcoin, and it could be a huge moneymaker long term. But in the short term, we got to understand Bitcoin's, entire life cycle. It's grown up in an environment where there was a massive money pump, right? And interest rates were insanely low. And now all of a sudden, if we're talking about raising interest rates, I don't know how Bitcoin holds up, and no one does. Bitcoin was created in 2009. Right? So no one knows how Bitcoin will hold up in a recession, a real recession, not the fake recession we had in 2020, where it was like, let's pump the economy full of stimulus when we were already coming off of a strong economy, right? That was a whole other type of scenario. So we haven't gone through a real recession with crypto and Bitcoin yet, and we're going to see just how it holds up over time. I can tell you that one thing that worries me about Bitcoin and crypto is no one's there to save the day if those really start to falter, right? Stock market and real estate market, definitely the Fed would look at that, and they start to have concerns if those babies start to fall. But let's say we go to a bear market on all the indexes. Right now we're bear market, NASDAQ, bear market, Russell. But let's say S&P 500 goes into bear market, Dow goes into bear market. The Fed looks at that. Trust me, they look at that and they're like, oh crap, we better do something. Maybe we have time to U-turn on this, right? The housing market, if all of a sudden new home orders dry up, construction dries up, and prices start to drop, the Fed will look at that. That is stuff they look at, I promise you. Bitcoin falls 50%. I don't think they really care at all. And I wouldn't be surprised if they would like that, to be quite honest. And so I do definitely worry about that. So overall, obviously, I'm an optimist. I'm a long-term bull on the markets. And I'm going to continue. My plan this year is keep my head down and just buy stocks. Buy stocks. I think there's a lot of great values out there, and there's a lot more emerging. And so I'm just trying to keep my head focused and just continue to buy companies I love for the long term. There's a lot of companies that are great deals this year. You very rarely get these sorts of opportunities. There's a lot of recession fears right now, and there should be. And it's very, very possible that could happen. And I want to give also credit to Elon Musk, because he called it out even before I called it out on the channel, right? Where I think in December he had sent that tweet that he thought we were going to go into recession. He said either the first half of I think he said the spring or summer. If you look back at that Elon Musk tweet, he said spring or summer of 2022, or at the latest 2023. And I gotta say, as the months tick on, it's looking more and more like a realistic possibility. So that makes it obviously a tough market dynamic to get any sort of short-term excitement in the market. Let's be very, very clear about that. But as somebody that's a long-term investor, you get these incredible deals in the market, right? And you very rarely get these sorts of opportunities. The amount of stocks I know of that are at 52-week lows, multi-year lows, or all-time lows. Like, dude, I could send you a list of like 700 stocks that meet that criteria right now. And that's not normal. And, when you get those sort of years, you got to take advantage of those. Otherwise, you always look back and kind of regret it, right? So anyways, guys, thank you so much for joining me. Hope you enjoyed this video, me kind of going through all this and covering all these different stocks. Much love as always. Let me know what stocks you're buying out there in the market. And also, if you're looking to join us in the private stock groups, Discord chat, Financial Fortress program, all those sorts of things, you want to join us in there with the 6- and 7-figure members, definitely check out the pinned comment down there. Much love and have a great day.